The Fed has been backed into a corner, keeping interest rates too low for too long. An anticipated move to raise rates has been dragging on longer than Obama's fairy tale promises. In this scenario, if the Federal Reserve actually begins this new policy, they will need to drop hundreds of billions of dollars in liquidity. So, what is the truth here? Well, you came here for the truth, so let me unveil that for you. We're going to get into the Federal Reserve potentially raising rates here in December 2015. Will they do it? Will they not? Well, we're going to discuss exactly how it will look. Let's begin with this article right here. I wanted to note this economist. He basically said this. In 2013 on my website, I calculated that QE2 moved repo rates on average 2.7 basis points for every 100 billion in QE. Okay, let's just stop right there for a moment. What I wanted to suggest right here is that this isn't much. For the amount of money that's being printed, the actual amount that it's being affected here isn't really that much. So hold on to that for a second. In order to move GC 25 basis points higher, okay, so we're talking about 0.25%, in a very rough estimate, the Fed needs to drain between 300 billion and 800 billion in liquidity. Oops, as they suggest right here. How is the Fed ever going to drain $800 billion in liquidity? And they make this suggestion further down. Putting that into context, QE2, which pushed the S&P higher from November 2010 until June 2011, was, quote, $600 billion. So what we have here is an overnight QE2 in reverse. Well, that is going to be massive. See, this took place over approximately, let's just say, 1 year. So what happens then when you try to do that overnight in reverse? Well, I really don't think it's going to end very well. And this is 0.25%. Imagine if they wanted 0.5 or 1.0 or what have you. I think they may actually go for it. They may not do it now. At some point, they may have to raise rates, but there's also the potential for them to go into the negative too. I've discussed this before. I really don't know what's going to happen at this point, but I'm prepared for all scenarios, and I believe that this needs to be addressed. We need to look into the potential that if they do raise rates, how's it going to happen? What exactly is the cause of all of this that's, leading up to that moment? And basically, they're suggesting that this is a disaster waiting to happen. They have more information in the article if you want to check it out for yourself. There's also an article here out of Zero Hedge really quoting here Goldman Sachs. So you can read it for yourself. I'm not going to read it, but basically they go into all of these different points, how the Federal Reserve can do it, what it means, how it's going to affect one business, how it's going to affect this and that, and they have charts and they have diagrams and everything. It is so unbelievably complicated. What I just wanted to highlight from this is that it's not like they flip a switch or they write the number into a computer. Okay, interest rates are now 0.25 today. That's absolutely not how this works. There's open market operations, which I've discussed before, and there's a whole bunch of alphabetical algorithms and everything else that they have running here. And it's going to be a big mess. The day that they actually go ahead and raise interest rates, I do believe that all of their computer algorithms that they have programmed here along the line within the financial system are going to go haywire, at least temporarily. I do think that ultimately they have the printing press and they can print as much money as they want to cover this up temporarily. If the activity starts to begin in the Eurozone, then they can print money over there and cover that up temporarily, and China can do the same, and all these other countries can go ahead and do the same. But of course, we know what the final result will be. This right here shows a divergence, the on-balance volume versus the S&P, showing you that this isn't looking pretty in the short term. But what about a longer term scenario? Since the end of QE3, we've had this being an issue. Less people are involved in the activity, of course. Why? The big spenders, aka Federal Reserve, aren't playing ball as much as they were during the QE scenarios. This is from my book talking about the possibility that interest rates could rise. Once they begin to rise, we're going to have a bad situation, particularly with housing. Now think about housing for a second. Why are people, particularly with Canada, why are they buying homes like it is nobody's business? Well, interest rates are near zero at this time. You can get a mortgage for less than 2% on variable here in Toronto. Note that after a few years, when mortgages become due for refinancing, they're going to be no longer able to afford those homes because the cost to borrow would have gone up significantly. We are going to experience bankruptcies at a high rate. Let's move into this connected article. Hong Kong home sales plunge 41.7% to a record low in November. Understand that what goes up must come down. This is just one article. I just wanted to show you, it's an update, that the prices were astronomical. In fact, are still today, but there are some hard times that they're facing in China, in Hong Kong, and effectively all over the world. And you can't have something that goes up forever and ever. This could be a temporary slump. This could be just a slowdown of in some way. But we need to highlight that. And then just connecting you into this, the diagram version, Hong Kong home sales, a record low right here. Understand that what we see here in Hong Kong is a microcosm of what's going on in the whole world. Unrelated, but I do feel that it is important here. I'll show you this one. Here, the former NATO commander, General Wesley Clark. He was the individual who talked about 7 countries in 5 years, explaining that the existence of the Islamic State helps Sunni countries, Turkey and Saudi Arabia, geostrategically by countering the Shiite powers, Iran, Iraq, and Syria. Okay, what he said was this: let's be clear, ISIS or ISIL is not just a terrorist organization, it's a Sunni terrorist organization. It means it blocks and targets Shia, and that means it's serving the interest of Turkey and Saudi Arabia as it poses a threat to them. That's right out of his mouth on an interview with the propaganda arm CNN. I'm surprised they actually said this, but here they are. Now, we have to listen to General Wesley Clark, a very informative individual, and it was actually, I watched a little interview that Webster Griffin Tarpley did, and he talked about the same situation, that Turkey and Saudi Arabia are really harboring ISIS, and they are the ones who are definitely supporting this activity that's taken place. Very interesting. I just wanted to highlight it, and we can look into those further details as time goes on. If you found this video informative, please give me a thumbs up. And of course, don't forget to check out Amazon, where you can actually flip through the pages of my book. They have a look inside feature, which will allow you to do that. Take care.